QuickBooks Online 2025. Bank feeds and your accounting system. How do bank feeds fit into the accounting system? Get ready and some coffee because we're about to learn how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample file provided to everybody by Intuit. Intuit being the owner of QuickBooks. Looking for a result from the search that has intuit.com in the URL, that giving us a little bit of assurance that it is a legitimate result. You might then get a prompt asking if you're a robot, in which case you can verify that you are not a robot. That should bring us into the sample file of Craig's Design and Landscaping Services. I'm then going to do the process that I'm going to do basically every time from this point forward, opening our major financial statements in the two tabs up top, that being the balance sheet and the income statement, remembering that those forms are basically our end result. So we're going to go to do that to the reports on the left-hand side. Then we're in the standard tab within the favorites. I'm going to right-click on that balance sheet and open the balance sheet in a new tab. And then right-click on the profit and loss, open the profit and loss in a new tab. And then I can go over to that balance sheet report. I'm going to close up the hamburger. I will be then adjusting the date range later, but for now I'm going to keep it as the default. And then I can go over to the income statement or profit and loss report, close the hamburger, and there we have it. So the first tab then, my data input tab, this is where I'm going to navigate around, do any data input, and then go to my results on the financial statements, balance sheet, and income statement as my general process, my general default rules. Now we want to think about the bank feeds, which are located in the transactions section on the left-hand side. Within the transactions section, it's under the bank transactions tab. We're going to have a whole nother course or section detailing the bank feeds process, how to set up or sign up to the bank feeds, import the data from the bank, take that information from what I call bank feed limbo here to the creation and or verification of the financial reporting data. However, I want to touch on it here because a lot of people have kind of a misconception due in part possibly to the name QuickBooks and possibly to marketing, which tends to market the idea that all you need to do is set up your QuickBooks system, sign up to the bank, importing all of your financial information from the bank, and then automatically that will just magically, using AI and whatnot, create your financial statements, which you can then provide your QuickBooks file to your CPA firm or tax preparer at the end of the year, and they can just use that and possibly integrate it into the tax software, and then it just creates your taxes at the end of the year and so on and so forth, and it's as easy as that. Now, that's magical marketing world. We are getting better. Bank feeds are great. They're a huge tool, a huge benefit, but it's not completely seamless and automated as might be kind of indicated possibly by some advertising, not just for QuickBooks, but any kind of like accounting system is going to have this tendency to want to say things are going to be easier than they might actually be. Now, how easy and how useful are bank feeds going to be to just automate your entire accounting system will be dependent upon the type of industry you're in and possibly the size of the business that you are in. So the way we really have to approach the bank feeds then is going to be, what kind of accounting system do we have? How does that accounting system typically work? And then how can we integrate the bank feeds into that accounting system? That's going to be how, in essence, the course is going to be laid out, in that we're going to think about the entire accounting system without the use of bank feeds first, because that's a full service accounting system that we're going to be utilizing that way. And as we do that, we'll talk about and touch in on the idea of when could the bank feeds automate this process and when would the bank feeds have a problem automating this process. So in other words, if I hit the plus button, we're going to look at each cycle: customer cycle, vendor cycle, payroll cycle, think about the forms in each of those processes and whether or not the bank would be able to automate that form or whether we would have to enter the transaction in on our side as a normal accounting process, and then how would the bank feeds connect to it. And then after we do that, we'll have a whole section on, or course on, the bank feeds themselves, and how do we actually set up basically the bank feeds. Now, if you really want to dive into the bank feeds and you think you have an idea of what's going on here, you could go directly to that section or course and just go right into setting up the bank feeds. But I highly recommend, if you don't have any idea of how the accounting system works, to at least get a general idea of how the forms work, because even when you set up the bank feeds, they're going to utilize the form. So to get an idea of this, note that the most simple type of bank feed process you're going to have is if you're on a cash-based system. Possibly if you have like gig work, you're a YouTuber or something like that. YouTube pays you, you pay everything else using electronic transfers like your utility bill and so on and so forth. Everything is basically automated. So that'll be the easiest process. But even then, when you connect to the bank, it's going to pull in data into this section, which is what I call bank feed limbo. The reason I call it bank feed limbo is because this information is pulled in from the bank, but it hasn't actually been included in the accounting system. It's not being used to create the balance sheet and the income statement. It's in what I call bank feed limbo. Why isn't it being pulled into the financial statement? Well, it's missing at least one key factor, and that one key factor is going to be the account. Now, there could be other factors like customers and vendors that you want to add as well, but at the very least, the system needs to know what account that you're going to post it to. So that means that even in the most simplified system, you're going to at least have to, in the first few months, go through all of the data that you pull in and then assign it to possibly an expense or revenue account. Once you're done with that, then it'll be somewhat automated at that point if you have a very simple kind of accounting type of system. So that'll be the idea. If your system is more complex, meaning you have any kind of accrual component within it, then it's going to be more complex. We're going to have more of a problem in the accounting system, and we're going to have to talk about how the bank feeds can be used to work around that process, still utilizing them, but not being able to create our entire accounting system possibly from the information from the bank feeds. Now, to think about this, let's first just think what a mock bank statement looks like. So this is going to be a bank statement, usually has like a beginning balance, your additions, and then your subtractions, and then the ending balance, and then it breaks out all of the detail of the increases or deposits, and then the decreases, which would be checks, or these days, most likely electronic types of transactions for the decreases. Okay, so that means that if I pull this information in from the bank, what it's going to give me is just this information. It's going to give me the information that the bank has. And that could be more or less detailed depending on the type of industry that we are in. So in other words, on the deposit side, where do deposits come from normally from a business? Hopefully, customers. So hopefully all the deposits that are coming in, we can, on the most simplified type of system, we can say that should be revenue. It's coming from customers. So I can assign it to an account of revenue account if I was in a simple system such as gig work, such as working at like YouTube or something, and that YouTube is paying me or Google's paying me, and then I might be able to assign that out pretty easily. But the bank only has the date and the amount. Now, so for example, if you're in a type of company where you actually make sales at a cash register or something like that, you take the cash, go to the bank, deposit it into the bank. What does the bank know? It knows the date of the deposit, and it knows the amount that you deposited into the bank. In that case, it doesn't know all the individual sales that you made because you made that outside of the bank. It only knows the amount that you deposited. So you can imagine in that situation, you're probably going to want to have more of an internal control over the check register to make sure that you're recording the sales as they happen at the register. So that's going to be like the added problem that you might have in that system, right? But if you have electronic transfers, like you're getting paid from YouTube or some kind of platform, then the bank also knows where the information came from. So they're going to give you in the memo, possibly the customer in that case, which might be like a YouTube or something like that. If you're getting electronic payments from actual customers, then it might give you information about the customers in some cases, in which case you can add the customer, tracking not only the fact that you got revenue, but you got information from a customer. What about the decreases? Money going out of your account. What happens to that? Well, it's usually going for expenses. So that's going to be your utility bill, your rent, and so on and so forth. Now, if you actually write checks, then it's going to be a little bit more difficult to just automate things with the bank feeds, because if you still write checks, then what happens when you write the check, it doesn't clear the bank. The bank doesn't know about it until the check clears. When the check clears, that's when the date is going to be recorded. So notice you have a timing difference. You have a problem there that when you wrote the check, they didn't know about it until it cleared. And so so that's going to be an issue. So that means that if you still write physical checks, then you're not going to be able to automate everything typically with the bank feeds, because what you want to do is track the checks that are outstanding, which the bank doesn't know about, right? However, many businesses are automated these days, so you pay everything electronically. If you pay everything electronically, then the date is pretty close to the accurate date. And you don't have a check number, but then you have the amount. So once again, you have the date and the amount on the increases and the decreases. So how does that translate over into QuickBooks? That means in bank feed limbo here, you're going to have the increases and decreases. And then if there's electronic transfers, you're going to have the bank memo to help you possibly determine what account it should go to and possibly add the customers for increases and the vendors for the decreases is going to be the general idea. So that at the minimum is what you'd need to know for a very basic cash-based accounting type of system. And what forms is that tied to? Well, that means that the only two forms you would be using in that very simple case would be basically a deposit form, which you're going to use to increase revenue, basically, which is not exactly how the deposit form is usually used in QuickBooks, but it works that, you can make a system that way in some cases. And then there's going to be decreases, which are expense forms, which are kind of like a check form without the check number. So even when you use bank feeds, you're still going to use these forms. And therefore, if you have a very simplified cash-based system where you have gig work or something like that, and you don't have to deal with accrual businesses, you at least want to understand what the expense form is and what the deposit form is, because those are the two forms that you will typically be generating when you create your transactions using the bank feeds. Now, you're also going to have an added problem that you have to think about this beginning balance, because usually when people start the business or start their QuickBooks, you have this beginning balance issue. And the question is, do I want to go back in time prior to the last year and pull in all of the transactions, or do I want to just enter the beginning balance and track the current information going forward? We'll talk more about that in our practice problem scenario as well. Typically, you want to have at least an entire full year in one accounting system, whether that means that you have to run like a dual system side by side with another accounting system, or start the cutoff at the current time frame, so that when you at the end of the year need to do taxes and or financial reporting, you don't need to tie together two different accounting systems, because that's ugly, that's messy to do. All right, so that's going to be the general idea. Now let's think about when it's going to be more complex. So to do that, I'm going to look at my flow chart. This flow chart is just the desktop version flow chart. Now, obviously, we're using QuickBooks Online. This is just a nice flow chart that gives us the actual names of the forms, which are basically the same in QuickBooks Online, and it gives us this nice flow chart. So it's a good visualization of the process. So let's think about, again, from easiest to most difficult to implement the bank feeds and why the bank feeds will become somewhat of a problem. So the easiest system, we can think about it by basically flow. If you're on the revenue side of things, the customer side, the easiest system, again, is to have gig work or something. You're a YouTuber or something like that. That means that when you get paid, you're just going to get money that's going to increase in the bank account, and you might just say, okay, all I need to do is record that as revenue. I'll just use a deposit form and record it as revenue. And then on the expense side of things, the vendor side of things, we would use what I would think of as the check form, which is like an expense type of form. And again, if everything is electronic, it's going to give us the name of who we paid, like Verizon for the telephone or Edison for the utility bill and so on, which will help us to determine the proper account, like telephone, utilities, and so on. And then we can just use an expense form, which is kind of a type of check form, to automate the transaction. That would be the easiest type of system. However, what if we're still in a cash-based system, but we have a check register? So you have a check register, so now you're going to be selling stuff like in a restaurant at the register, and then you're collecting cash. Let's just say it's cash for now, and then you need to make the deposit. Well, in that case, if you're at the register, we would use what was called normally a sales receipt form when you collect the money. And then when you make the deposit at the end of the night, it's going to include multiple sales. So you could still try to stay in a cash-based system and just say, look, I made 20 sales. It added up to $5,000 or whatever, $1,000. I'm depositing that into the bank at the end of the night. I'm going to wait till it clears the bank, which will just be a couple days, and I'm going to record the deposit as revenue of just $1,000. What you're losing, though, is you're not recording the actual individual sales that way, which means you're kind of losing the internal control over the cash register, right? So what you might want to do instead for a more complex system is record the sales at the cash register and then record them into undeposited funds and then verify that what you added up ties out to the amount that you think it should tie out to your revenue for the period, and then basically deposit it, right? So you have this internal control that you might want to put over the register, which becomes a problem in the system. So you would be entering in the system the sales receipt, possibly using undeposited funds as you record it, and then transferring out of undeposited funds, which we'll talk more about later, to the deposit, which means that when you tie it out to the bank feeds, you're going to connect it. You're going to verify the transaction rather than record the transaction from the bank. You have to use more of a full service system in that case. What if you have to invoice a client? So now you're in a type of business where you have to invoice the client, meaning a bookkeeper, a law firm, a landscaper. You do the work first. You tell the client what you did and you bill them with an invoice form. Well, in that case, now you've added an accrual component. You're not even on a cash-based system. And that means this transaction is going to increase accounts receivable and accrual account, the account that tracks people owing you money. And you can't do that with the bank feeds because the bank feeds doesn't have anything that doesn't include cash in it. So that's where you're going to end up with a problem. How do the bank feeds fit into that system? Well, I could try to have an invoice and then wait till they pay us, possibly with a electronic transfer, and see when that comes through the bank feeds, connect that to the invoice. But I might also, more likely, I might have to say I have an invoice, then I'm going to receive the payment from the invoice, and then I'm going to record the deposit myself. And then when it comes through the bank feed isn't going to record a new transaction, but rather just verify that the transaction I recorded is correct, meaning we're doing more of a full service bookkeeping system. The bank feeds are helping us to do a bank reconciliation, not actually recording our books in that system, which is the classic full service type of accounting system. Ideally, what we would like to have happened is we do the books separate from the bank. Why? Because then we get a verification. That means that we're doing the books ourselves, and then the bank is verifying all the transactions that went through cash. Because cash is the lifeblood of the company, that's a huge internal control. Two independent people are doing the same thing. We can verify or reconcile, and that gives us a huge internal control. That's what we would like to do. But obviously, it would be easier and faster in some cases to just simply rely on the bank to record the transaction. And if we could do that, we're typically going to do that for small companies in particular because it's faster, right? So, but you can't do it if there's an accrual component of accounts receivable because you're going to have to track that. If you have an estimate, obviously the estimate has no cash involved, so you have to add that in the process. And if you're dealing with intermediary other than just the bank, like Stripe or like a PayPal or like you're receiving credit card payments, then you have an intermediary of the credit card. That's going to also throw a wrench into the system most likely. And you're going to have to, we'll talk about how you can deal with that problem if you're collecting through those intermediary accounts. You could just say, hey, look, I'm just going to use PayPal or Stripe in order to then put that into my bank account, wait till it hits my bank account, and then once again record it as revenue when it hits the bank account. But you're losing a lot of detail there, right? Because you're losing the sales transactions that went through the Stripe or the PayPal to record them, and you're just waiting till it hits your bank account, and then you're just recording it as a lump sum. That could work, be simplified, but you might want more detail in some cases. And then on the vendor side of things, if you're recording everything with electronic transfers, which is more likely to be the case, oftentimes, especially for smaller businesses, you might be able to automate this. This is where the automation really typically shines, meaning especially bills that are routine, month-end bills like telephone, utilities, the rent. Those are things you can usually automate and record them with the bank feeds. But if you're putting things into accounts payable, typically for larger businesses who are trying to wait as late as they can to pay for something due to the time value of money, the size of the transaction, and number of transaction, making holding on to that money for an extra 15 days important, then you're going to have an accrual component in it again. You're going to be increasing the accounts payable. There's no bank transaction that will record that for you. So typically you're going to have to increase the accounts payable, then pay off the accounts payable, and then once again use the bank feeds to reconcile rather than record the transaction. You also have inventory. The problem with inventory is that normally you have to record it as an asset and not just expense it. So when you pay for the inventory, you have a problem that you have to put it on the books as an asset instead of just expensing it, which would be the easiest cash-based thing to do. And then when you sell the inventory, if you're using a full service perpetual system, you typically would need to use an invoice form or a sales receipt form to properly track the inventory within the accounting system, or you can work around that by using a periodic accounting system, tracking the inventory outside, as we talk about in a Shopify store or something like that, which we have a whole nother course or section on. So inventory will throw a wrench into the system. And then, of course, we have payroll, which throws a wrench into the system because payroll is going to deal with payroll taxes and payroll laws, which will be the things that will be different from location to location. Different countries will have different payroll laws and taxes, but hopefully there'll be some similarities so you can get the idea of it. We're going to be looking mainly at the U.S. system with it, but even in the United States, it's going to be different based on location, such as state and local locations could have different tax implications. Therefore, you have to pay extra for payroll typically. And then the question is, how do you want to deal with payroll? You might be able to still automate the system, making it cash-based, relying on the bank feeds a lot more if you have a third party outside of QuickBooks do the payroll, and then you do an adjusting department helping you with the adjustments. We'll talk about that process. If you pay for payroll within QuickBooks, then you're going to have to deal with accrual components of withholdings, which deals with payroll liabilities and reporting needs, which again throws a wrench into just recording your books from the bank feeds. So those are just a few things that throw a wrench into the process of the bank feeds that I want to touch in on now so that you kind of understand what the process is. We're trying to say, I'm going to try to address all the forms that we're going to use and tell you when and what industries you might use that, and then in what industries it would be easier. And then as we go through all of these forms, we'll talk about then whether or not you'd be able to automate that with the use of the bank feeds or how the bank feeds would fit into the system so that when we do get to focusing in on the bank feeds themselves, you're going to have an idea of how the accounting system works so that you can figure out how the bank feeds are going to fit into your needs for the accounting system. So again, if you have a very basic system and you think you can record everything with like a deposit form and an expense form, you might want to just look at those two forms that we'll take a look at and then maybe jump to the bank feeds. But that would be the quickest thing to do. You'd at least need to know those two forms. If you have any more complexities, then you're going to have to say, okay, which of these forms are going to be used in my accounting system? And we'll talk about those forms. You want to understand the forms because they record the transactions, and then think about the bank feeds, how they're going to fit into it. All right.